Hello, this is Ben Moore, Finance Manager for the Office of Community Assistance, and this video will help walk you through budgeting for indirect costs. This video deals with the particular budget line item 317, which is in the administration category only. There is no program support option for this cost category. If your agency elects to claim indirect costs, the cost will be charged to the 317 budget line item and are considered part of the allowable 16% administrative costs allocated for this grant, and no costs in the indirect category can be charged to any program support budget line item. As a reminder, the indirect cost base is for each particular grant, not for your whole agency. So your method is for your agency, but your indirect cost base is for each grant. So the steps required to claim indirect costs are as follows. The first step is you need to enter the indirect cost rate information on Section A and on the ICI tabs on the budget template. The second step is that you need to complete supporting documentation that corresponds to the type of indirect cost rate your agency is using. And there are two separate types of indirect cost rate. The first is modified total direct cost, or what's referred to as MTDC, and that rate is 10% across the board, no matter what your costs are. That is a standard rate of 10%, and it's referred to as the de minimis rate. The second option is that you can have a negotiated indirect cost rate agreement. We also often refer to that as the NICRA. That is where you will negotiate the indirect rate with either a federal agency or the state of Illinois. The third step in claiming indirect cost is to complete the indirect cost tab on the budget spreadsheet with the information generated from the indirect cost calculators, and you then add narrative information just as you do on all the other tabs. For more details on the first step, you need to enter the indirect cost rate information on Section A and the ICI tabs of the budget spreadsheet. So you will go to Section A and enter the indirect rate and the base that you're using below the line 317 indirect cost. And here's where it will appear. There's the indirect cost 317. Here's where you enter your rate and the base calculation method. So again, you enter the rate for de minimis, or for if you're using the MTDC, you would enter 10% as the de minimis rate. If you were using the negotiated rate, you would enter the rate that you have negotiated with the federal or state agency, and you would enter it there. As far as the base, you would enter descriptive information. We don't want a dollar amount entered down here. So if you're using the MTDC, you would simply enter MTDC down here. If you have a negotiated rate, you would enter the categories utilized in the negotiated rate that you have. Common types are salaries, travel, et cetera, as listed in your federal or state agreement. Again, typically, some variety of salaries or combination of salaries and fringe costs are most common, but we'll cover those a little bit later in this video. So you need to complete that on the Section A. You also need to enter the indirect cost rate information on the ICI tab. So on the ICI, and that stands for Indirect Cost Information tab. So you need to go to that tab and you need to check the box next to the indirect rate you are electing to use. So there's a whole variety of options. If you do select option 1 or 2A, you will need to complete the negotiated indirect cost rate information at the bottom of the tab. And this is what it looks like here. You do the date range for it, you do the agency, you enter the agency that is approving it, the rate, and again, the basis, similar to what you entered on the Section A tab. So you would say the basis, like salaries and fringe or whatever basis has been negotiated. Step 2 is the required supporting documentation. So if you're using the 10% de minimis, or if you're using it for a short time while you're until a different rate is accepted by your federal negotiating agency or the state, you would complete a MTDC calculator. If you are using a federal negotiated rate, you need to provide a copy of the approved federal negotiated rate, and you also need to complete an indirect calculator for negotiated rates, which is just designed a little bit differently than the MTDC calculator. If you are using a state negotiated rate, you need to, again, provide a copy of the approved state NECRA, and you would also need to complete the indirect calculator for negotiated rates. Both the MTDC calculator and the calculator for negotiated rates have detailed step-by-step instructions on how to complete the spreadsheet. So I ask that you carefully follow those instructions in order to accurately complete the calculator. Here's just screenshots of what the MTDC and the negotiated rate calculator look like. This one is the MTDC, and at the top you would enter all of the costs that you have, the budgeted amounts you have for the rest of your budget. You would also enter your grantee name and the number and your grant number and the date prepared. Again, this is a continuation of your costs. You would also enter your direct admin costs and any special category costs. And this section here is for exclusions. There are some items that must be excluded from the rate. And that would come down, help you calculate the funds you have remaining to be budgeted. And then this bottom section, once you put in a couple of the categories here that are in yellow, it will help you determine how much your allowed indirect cost is that will later be transferred to your indirect cost spreadsheet, which we'll go over a little bit later in this video. Similarly, the indirect calculator for negotiated rates has a section up at the top to enter your budgeted amounts, but the difference for this one is that instead of entering your whole budget, you will enter just the categories that are included in your base that you negotiated with either your federal agency or the state. Again, typically it is based around salaries or fringe, that type of thing. Again, there are exclusions. Potentially in a negotiated rate, indirect rate, many times the exclusions will be specifically stated in the rate. So those are items you'd enter here. You'd enter your total allocation and what you've budgeted for direct admin, and it would help this spreadsheet calculate what is your allowable indirect cost. And again, these three items would be transferred to the indirect tab of your budget. As far as how to complete the MTDC calculator, first you would enter all the budgeted direct costs for this grant, the program support, client assistance, direct administration, and the special categories. You would enter all the exclusions, and those are equipment. That's auto-populated from the equipment line item as long as you've populated it above. Rent and rent assistance, you need to enter any rent from any tabs, the program support rent, direct administration rent, or client rent assistance that you have in some of your work programs. Also scholarships, fellowships, tuition remission, participant support costs, and test registrations. You would need to enter those, and those could be on any of the above tabs. The portion of each subaward or subcontract over $25,000 also must be excluded, and there is a separate tab on the MTDC calculator to enter those subawards and subcontracts. So the modified total direct cost base subtotal minus the exclusions that are must be excluded from the amount will calculate the modified total direct cost base. That base is then multiplied by the standard 10% to come up with the maximum indirect cost that you can claim if you're using the MTDC calculator. There are 4 limiting factors that determine the final amount of indirect costs you can budget. The first of these delimiting items is what you have already budgeted out of your total grant allocation. So that leaves the funds remaining to be budgeted. Secondly, your total admin allocation for this grant limits is a limiting factor. Also, what you have already budgeted in direct admin leaves the remaining admin allocation available because you have been allocated 16%. Once you budget direct admin, your total available 16% minus what you've budgeted leaves your remaining admin allocation available. And the last one is the minimum allowed indirect base on your indirect rate limits what you can claim as indirect costs. So this calculator is set up to take these limiting factors into account and to calculate the final allowed indirect costs you can budget. So because of these limiting factors, you can only claim the smallest of the 4 amounts in this section. Once this is calculated, step 6 right here will show you the 3 items you need to copy over to the indirect tab of the budget template. So the details of how you complete the calculator for indirect rates depends largely on the details of the negotiated rate or negotiated rate agreement for your agency. So each one is different, but we tried to provide examples of those that are most common. So that's one of the main differences between the MTDC calculator and the calculator for indirect rates is that what you enter specifically in the top budgeted section really depends on what's in your negotiated rate. So you need to enter all the budgeted direct costs that are included in your negotiated base for this grant alone. So for example, some of the most common ones that we've seen are direct salaries under personnel and direct admin, fringe benefits under personnel and direct admin. Now if I think I mentioned this earlier, but if your negotiated rate says that if your base has a total direct cost excluding some particular cost items, then you need to go ahead and fill in all the budgeted amounts in the base calculator portion at the top of the spreadsheet. And then when it comes down to the exclusion section, we'll exclude the specific amounts that are itemized or detailed in your particular negotiated rate agreement. So again, for the negotiated rate, you would enter all the exclusions, and once again, these are the most common ones that we've seen. So if fringe benefits are excluded, you'd enter the fringe benefit amounts from the program support fringe and the direct admin fringe line items. Again, only if they were included in the base allocation. Some that we've seen say they exclude capital expenditures, and this likely would just be the items that you've included in the equipment line. Some have the portion of each subaward, subcontracts over $25,000. Again, there is a separate subaward subcontract listing tab on the spreadsheet. If you have subawards or subcontracts over $25,000, or if you have subawards or subcontracts, you would enter them on that tab, and it will calculate the amount to exclude, which will transfer to the indirect calculator exclusion section. So another item that we've seen excluded in negotiated rates is flow-through funds. These are costs that do not require the full range of management services and would result in a distorted distribution of indirect costs if they were included. So you would also include any other items that are specifically listed as exclusions from the base in the agreement that you've struck. So similar to the MTDC, the calculator for indirect rates has 3 limiting factors that determine the final amount of indirect costs. They are your total admin allocation for this grant. Again, that's the 16% that you're allowed to take out of this grant. The second limiting factor is what you've already budgeted in direct admin. Similar to the MTDC, your total 16% allowed less what you budget in direct admin will result in the remaining amount of admin allocation available. And the third and final limiting factor is the maximum allowed indirect cost based on your indirect rate, which is the result of your calculator. So for calculator for indirect rates, the formulas are the indirect base subtotal minus any exclusions, if there are any, will equal your indirect base. The calculator then takes your indirect base and multiplies it times your particular negotiated rate, and that will result in the maximum indirect cost for your indirect cost rate agreement. So as far as completing the calculator for indirect rates, again, similar to the MTDC calculator, it is set up to take the limiting factors that we itemized on the previous slide into account and to calculate the final allowed indirect costs that you can budget. Again, because of these limiting factors, you can only claim the smallest of the three amounts in this section. Once this is calculated, step 6, again here, will show you the three items that you need to copy over into the indirect tab of the budget template, and we'll walk through that here in a couple minutes. So as far as the minimum requirements for the cost grid on the indirect cost tab, in the bright yellow box under description, you will use one of these small or brief descriptions. You would either put 10% de minimis rate, which means you're using the MTDC. You would put a federal negotiated rate if you have a rate that's negotiated with the federal agency, or state negotiated rate if you have one that's negotiated with the state of Illinois. In our example here, we have a federal negotiated rate that we've included here. Now, as far as carrying the three numbered items from either the MTDC or the indirect cost calculator or indirect calculator for negotiated rates onto this tab, there are, again, as I showed in previous slides, three items from the rate calculator that you need to carry over to the indirect cost tab on the budget spreadsheet. So the first one will go under the base, and that's here the indirect base is item number 1. Number 2, which is the indirect rate. So for de minimis, that's always going to be 10%. For negotiated rate, it's going to be your individual agency's negotiated rate. That will go under the rate column. And number 3, which is the adjustment, if that's applicable, will go to the right of the big gray box on the adjustments as the adjustment. If the adjustment is negative, the number in the calculator is a negative number that comes from this calculator. You enter it as a negative on the indirect cost tab, and we're going to go over that next. So as we mentioned before, the items 1, 2, and 3 from the bottom of your cost calculator will go in these particular boxes on the indirect cost tab of the budget spreadsheet. So number 1 will go in this base box. Number 2, which is the rate, will go here. And number 3, if it's necessary, an adjustment, it will go in this adjustment so as not to exceed your total admin cap. So in this example, the cost calculator, or the indirect cost calculator, showed that this agency could claim $31,040 in indirect costs, but likely because they've already budgeted so much in their direct admin budget categories, that reduced what was available in their 16% admin by $8,500. So ultimately, they could only claim $22,540 in this. So this $8,500 reduction is the adjustment that was a result of all the calculations they did on the cost calculator for indirect rates. So that completes the budget grid or the cost grid section of the indirect cost tab. Now, as far as the narrative section, what's required is if you utilize a negotiated rate, NICRA, you need to provide the rate that was used and give a description of what items are included in the base. So here's an example. You would say I used a federal or say a state NICRA, and the rate that we use is 15.52%, and then you would put, here are a bunch of different examples of a base, but you would just put the one that pertains to your negotiated rate. So in the one example, you would put your 15.52% rate, and then you would say maybe salaries and wages plus fringe. Or another potential is direct salaries excluding fringe. We've also seen total direct costs excluding capital expenditures and that portion of each subaward in excess of $25,000 and maybe flow through funds. So these are just examples. You need to enter what is relevant to your agreement. So again, any other base that is part of your approved NICRA would go into the narrative. And new for this year, we'd like you to give a brief description of the items that you plan to charge to your indirect cost pool. So we don't want you to just say MTDC or list the items in your indirect base. We want you to list the types of items that might be included. So remember that the indirect cost pool should only include costs that cannot be clearly allocated to a specific program or grant. So an example might be as to what you're going to charge to your indirect cost pool is the portion of executive director salary that cannot reasonably be charged to direct admin. The financial audit costs might go here, in-house IT troubleshooting and support charges, and maybe security expenses, which are the alarm company or the security personnel. Again, that's just an example of some items that you might list as included in your indirect cost pool, but we'd like you to add that to the narrative so we get a good sense of what you plan on charging to that indirect cost pool. Also, you could use the narrative to explain if you're choosing to claim less indirect costs than your calculator allows allows you to claim, then you could put the reason. An example is due to the admin cap or choosing to claim more direct admin, something like that. For negotiated rate users, if it is difficult to see what makes up each of the exclusions and where these amounts came from, please explain those in the narrative so that we understand how you arrived at the dollar amounts you put in your exclusions. So that concludes this video as far as budgeting for indirect costs. Remember, we do have separate videos available as guides to completing all the other individual cost tabs in the budget spreadsheet. So I invite you to view any of those that you might find helpful, and I thank you for watching.